Okay, guys, and so we are getting closer and closer to the adult world. If you think back, where did we start this year? We start at sole proprietors. We did the financial statements of sole proprietors. In the past, we always did in the first year clubs that we threw out, I think, a year, 2 years ago, because it is really a non event. In my whole life, I've never used club accounting, and I'm definitely not a young person. And then we always used to do partnerships. So if you go and have a look at old papers, exam papers, you will see that in every paper, up to the end of last year, there was a partnership question in that paper. And at the end of last year, we decided to throw that out as well, because partnerships is also a bit of an obsolete type of entity, and we decided to introduce you to group statements. Now, group statements you're going to do this year. You're going to start only with the basics this year. Next year, you're going to expand on that. The year thereafter, you're going to expand some more. And then in your CTA year, you're really going all out doing group statements. And then thereafter, you're going to do it in practice. So group statements really very important. What is it all about? What do we want to do with group statements? And what do you need to know in this year about group statements? Now, I've listed here a number of IFRS statements that actually has something to do with group statements. IFRS 10 is all about consolidated financial statements. Now, consolidated financial statement, and you will see if I'm going to go further, I will explain it better to you. That is where there's a group of companies, and you will soon understand what that means. And for that group of companies, I'm going to compile one set of financial statements. And that is what we call a consolidated financial statement. So there are certain disclosure requirements of our interest in another entity. That is all described in IFRS 12. Our interest in another entity, that means that we have, let's say, a 30% shareholding, and there are certain things that I have to disclose in order to be IFRS compliant. Then IAS 27 is all about separate financial statements. Now, separate financial statements there is a group of companies, so I have to do consolidated financial statements, but then for some reason, it doesn't make sense to do consolidated financial statements, and IAS 27 tells you exactly when separate financial statements can be compiled and should be compiled and how it should be done. Then IFRS 3 is all about business combinations. Now, business combination is either a group of companies for which I have to do consolidated financial statements. A different business combination is associated companies. So if you see an associated company, it means I have an interest in a company, but I do not control that company. That's an associated company. I have a shareholding of between, I think it's 25 and 50%. But I don't exercise control over the company, so there's another shareholder that actually has the controlling interest in that company, so therefore I'm not the main shareholder, and that is when we do equity accounting. Now, we're not going to do equity accounting this year either, but equity accounting is a sort of a derivative of a consolidated financial statement. And then IFRS for SMEs. SME is a small, medium, and medium enterprises. That is what SMEs is standing for. There's a whole set of IFRS statements for SMEs, and in section 9 of that statement, it also prescribes some of the requirements that we have to adhere to when we're going to compile group statements. Now, what do we want to achieve, and what should you be able to do this specific year? Now, we do not require from you to purchase the Group Statements Volume 1 textbook this year. However, for next year, you will have to buy that textbook. You will be okay just by working through the notes. If you work through all the videos that you're supposed to watch, not only the videos that I'm posting, but also the YouTube videos that I'm referring you to. So you have to watch all of them. And then you will be fine for this year. But for next year, like I say, you're going to need that textbook because it's going to get much more complicated. You have to identify the basic characteristics of a group. So what is a group of companies? What does it look like? What is the characteristics that it adheres to? And you have to apply it in discussion and calculation questions. So again, we can ask you theory when we're talking about group statements, or there's also a lot of calculations in group statements, so we can ask you that as well. Obviously, guys, financial statements. We always ask financial statements, and everything in accounting eventually ends up in some or other financial statement. And all of them has certain requirements that we have to adhere to according to the IFRS statements, so you should know exactly what it looks like and how you should compile it. You must be able to discuss the composition of a group of entities under the following headings. What does it mean if one company controls another entity? Very important. What is share capital and whose share capital must I recognize in a set of consolidated financial statements and why? What does voting rights mean? And what is the impact of voting rights on consolidated financial statements? Extremely important. Then here we are at presentation once more. Discuss the presentation of and consolidation procedures for the preparation of group financial statements, and you must also be able to compile that group financial statements. Now, the first thing that I want you to do is you're going to pause this video and then you go to these videos that I have put down here for you to look at. The first one is a discussion of exactly what is a parent company or a holding company. Now I'm going to discuss it shortly hereafter, very short and sweet. Go and have a look at the video before you're going to listen to what I have to say when we go further. The second thing is watch this video and there they discuss what is a subsidiary company. Again, before you're going to watch this video any further, watch this video first. And then the third thing that I want you to look at is a video which is discussing when is a company controlled by another company. Very important, go and watch that. Now once you've watched these 3 videos, then you can continue with this video. Now I'm going to discuss parent companies, or another name for parent company is a holding company. IFRS likes to speak about parent companies, but in the wild world there outside, I haven't heard a lot of parent companies, but I've heard a lot about holding companies. A holding company, what is a holding company? I'm going to discuss a little bit further what's a subsidiary company and what is control. And in order to do that, I have taken NASPER's organizational structure. Now NASPER, if you don't know, is the company in South Africa who has the largest market capitalization of all companies in the country. And that means that it has the most shares and the value of its shares is by far the highest of all other companies listed on the JSE, as well as they also are listed on the L2X exchange. Now, if you look at NASPER, NASPER has a 96% ownership in Takealot. Now, all of you, I'm sure the ladies maybe more than the men, I don't know, but maybe the men as well, we love Takealot. And it's not only actually Takealot, Takealot is just the main company of that they have a 96% ownership in. Then NASPER also have 73% in a company called Prosus. Now Prosus was established about a little bit more than a year ago. Now Prosus is a company which NASPER has formed in order to accumulate all its foreign internet interests in. Now of that internet interests, Tencent, which is a Chinese company, I think you must have heard about Tencent, in which Prosus has a 31.1% stake in, they are the main contributor to the revenue figure of Prosus and then eventually obviously NASPER. Now the revenue of 2019, guys, of Prosus was 16.831 million US dollars, of which Tencent Holdings contributed to that revenue $14.457 million. So you can see there, by far, the greatest contributor to the revenue line of Prosus and Naspers eventually at the end of the day. So Prosus, 73% held by Naspers, 27% is being held by the general public. And because it's also a listed company in South Africa, the main listing, though, is in the Netherlands. So they've got a dual listing, one in South Africa, one in the Netherlands. And the reasoning behind Prosus was that they have to unlock the value of Naspers. It is so valuable that the South African stock market cannot absorb that value and really unlock the value to its fullest potential. Good, and then they have 100% ownership in Media24. Now, Media24, that is the main company, and Property24, News24, Fin24, all those 24 companies are all part of this Media24. Now, guys, let's have a look at the structure here. Naspers owns 90% of Takealot, 73% of Prosus, and 100% of Media24. So somewhere in Naspers' statement of financial position, they will have an investment in Takealot, an investment in Prosus, and an investment in Media24 of whatever the amount was of the shares that they've bought in those companies. So that would be the contributing factor in his asset levels on the statement of financial position, the investments that he has in these companies. In his income statement, what is he going to recognize? The only thing that he can recognize in his income statement is dividends received from these companies. Now just sit back and think a little bit logically. Do you think that if you look at the income statement of Naspers, where there's only dividend income reflected in, is that really representative of the total income that Naspers was entitled on in the current year? When do I recognize dividends, guys? You know, we've done companies. We recognize dividends when it was declared. Is that necessarily an indication of the profit that that company who declared the dividend has made for the year? No. So, is it then correct to say that in Naspers' books, where they're only going to recognize dividends, which is received or receivable from its subsidiary companies, and Naspers, by the way, we call the holding company, and these companies we have shares in, which is a controlling shareholding, that is what we call subsidiary companies. So here's the holding company or the parent company, and these companies are the subsidiary companies. That's the companies in which he has shareholding and he has a controlling shareholding in it. Media24 is 100% ownership, so that is what we call a full subsidiary of Naspers. 73% of Prosus, so that's a subsidiary, 90% of Takealot. Okay, coming back to my question. Do you think that it is its income statement where they only recognize dividends received or receivable as an income for the year is representative of the total income or revenue for the year that it was entitled on? No, guys, it isn't. If you think about the statement of financial position where there's only the investments that he made in these companies, which is lying on the asset side of the company, do you think that is representative of the total assets that's under control of Naspers? No, guys, for sure not. So that is the rationale behind group financial statements. We said, yeah, we have to show Naspers' own results, but really it's really meaningless. It only starts making sense where we are going to add in this income statement all the income and all the expenses that it actually controls. So if 90% of the income and expenses of Takealot and 73% of the income and expenses of Prosus and 100% of the income and expenses of Media24 is included in his income statement, I take the dividends out, and instead of showing the dividends received, let me show the true picture, which is his share of that income and expenses of all the subsidiary companies. Then it's fair representation. Then the figures start to make sense, and then the figures start talking to us, because then we have actually shown the true results of Naspers as a company. Now, that is the purpose of group financial statements. So consolidated financial statements is in a single entity, we're going to combine the results of the whole group together in order to show the results of the group as a single economic entity. Now, Naspers and all group companies or holding companies is also obliged, according to IFRS, to show the company results as well as the group financial results. So do yourself a favor and go and Google Naspers last published financial statements, and you will see that in the financial statements there are 4 columns. One being named company, and it will be this year and last year. So the 2 comparative years next to each other, but the main heading company, and that will only be representative of Naspers, the company Naspers' own results. So the dividends received, the investments in all these little group companies, that will lie in the company's own financial statements. And then you will see a consolidated figure, which is consolidated this year opposed to consolidated last year. And the consolidated figures is going to be the whole group together, where I'm going to add everything that Naspers actually controls. So that, in short, is the rationale behind consolidated financial statements, and what is a holding company or parent company, and what is a subsidiary company. If we expand this thing a little bit further, you can see here we have said Naspers. This is its foreign interests, and that is all being combined into this new subsidiary company, of which I have 73% interest in Prosus. And you see that in Prosus, 27%, 73 plus 20%, 27% equals 100%, is all minority shares. And that is being scattered all over the show, because that 27% is trading on the stock markets. Now, Prosus again owns 31% of Tencent. It earns 29% of Mail.ru. Now, that is a Russian app, like an email app. And then online classifieds. And then it has a food delivery Hero. I think they are mainly in India, I think, if I remember correctly. iFood, Swiggy. They are main contributor to the bottom line. And then other is things like payment channels. I think PayPal, for instance, is also a Naspers Prosus application. And this is all about safe payments over the internet. So you can see here, this is all internet driven. Now let's look at Tencent, for instance. You see there that the shareholding in Tencent is only 31%. So it's not a majority shareholding. However, that's the main shareholding. So the rest of the shares in Tencent is also all scattered over the show. Now, if one company owns not a majority shareholding in another company, but they exercise control over that company because they have the most shares, although they don't have more than 50% of the shares. The other 69% shareholders have a little bit of shares here and a little bit of shares there. So none of them can exercise any say over the decisions that the company can make. And in a case like that, although it's not a majority shareholder, Tencent will then still be a subsidiary of Prosus, because Prosus exercise control over the strategy and the decision making of this company. A few interesting facts around Tencent is Naspers, the most valuable public company in Africa, will list Tencent and all its non-South African internet assets on the Euronext Amsterdam stock exchange, making it Europe's largest listed consumer internet company by asset value. It's obviously the largest one in Africa, but it's also the largest one in Europe. Guys, I think it's pretty impressive. Prosus, as the new company is known, jumped 29% above its reference price as of 8:04 a.m. Now that was the day that Prosus was listed in the Netherlands. To value the group around 123 billion euros. Now translated back into rands says that the contribution of Prosus to this South African company is 2 trillion rands. I don't know about you, but I think I can live with 2 trillion rands for the rest of my life. That is pretty impressive. Naspers is going to retain the 73% stake in Prosus, and the other 27% is going to be traded on the stock exchange. Then I say Tencent has been one of the most successful investments in the history of investing, and it's one that enabled Naspers to add 2 trillion rand to the JSE over 18 years at huge benefit to South African savers. Again, guys, like I say, this is pretty impressive. Let me tell you where Naspers has actually originated. They originated, I think it was 1915 or 13, one of those years. And they started off in Cape Town with a little newspaper, the Volksblad. And that Volksblad has grown over the years to this 3 trillion rand worth of company listed on our stock exchange. Now, the reason for that was vision. Vision. The CEO, who was also the chairman, Chris Bakker, took a sabbatical, I think it was for 18 months, and he went overseas to start investigating different type of investing possibilities that Naspers can actually consider. And one of them was obviously the Tencent one, and that paid off very handsomely over the past number of years. So it is really all about vision and where do we go to, and then obviously I think it's also a little bit of luck that is included there. Tencent, the Chinese company, 31% owned by Naspers, has had a storming year with the share advancing by 43.4%, valuing the company at $673.5 billion and making it the world's second largest social media operator after Facebook. So guys, this is impressive. And I think I'm proud to say that Naspers is a South African company. Now, coming back to consolidated statements, when is a group formed? That is when one company buys shares in another company. Now he has a share investment in that company. The second thing is it must not only be shares that he's buying in that company, but that shares must give him control over this company in which he has bought the shares. Now, when do I control a company? Well, obviously, if I am the majority shareholder, then I control a company. Because when voting time comes about important decisions, and I have the majority shareholding, obviously I have the majority say in what the company has to do, cannot do. So that control is very much about voting rights as a shareholder. Now, another thing that also establishes control is if a company controls the composition of the board of directors of another company. Why would that then be deemed to be control, guys? Because who is deciding in what direction a company is going to go? The board of directors make the recommendations and the suggestions to the shareholders. The shareholders eventually, if it's huge or major, the shareholders will approve that. But they do not think it. They don't find it out. They don't lobby it. They don't do the homework about changes that needs to take place in order to make a company grow in the future. So that is, if I can control the board of directors, I can control the direction in which a company is going to move into. I'm going to control about the decisions that that company is going to make in future. And because I'm going to control that company's future, I am in control of that company. And although I don't have the majority shareholding, but I control that company becomes a subsidiary of me. Now, once I bought that and I have control over the company, I have a group of companies. And we call this, and then once I have a group of companies, I have to compile one set of consolidated financial statements. So at year end, this company, let's call it company A and that company B. Company A has to have financial statements for company A on its own. And company B then is going to have a set of financial statements for company B on its own. And then obviously there's going to be a consolidated set of financial statements where I'm going to add these two together, and I'm going to have a set of financial statements who's going to treat this group of companies as one economic entity. And I'm going to have one consolidated income statement, one consolidated statement of financial position, one consolidated cash flow statement, one consolidated notes to the financial statements, one consolidated statement of changes in equity, as well as then only for A and only for B. So please go for me to these next videos. Look at them all before you're going to proceed to the second video on group statements. In the first two videos here, they actually discuss in much more detail what is consolidated financial statements. It's very important that you understand the principles behind that. Otherwise, you're never going to understand what you try to do. So go and watch those videos, look at the principles behind consolidated financial statements, and then watch this video, which explains control out of a consolidated perspective a little bit better. And then once you've done that, then you're going to proceed to group financial statements too.